Now, the asset tracker in Lizzy starts off as a basic spreadsheet of sorts that gives you the ability to keep track of all of your major assets in the company. And then as you depreciate them, it actually takes care of doing the actual general ledger hits for you. So to be clear, the first step of using the asset tracker is a manual operation. You'll basically pay for the item or finance the item or whatever it is that you're doing, and then you're going to actually come into here and put an entry in here. There are no general ledger hits that happen when you put the initial entry into this control. At some point in the future, we may make that happen, but at this point, due to all the complexities of how the transactions take place, we're not actually doing the first part of this. So as an example, we would go and buy, let's say we buy a new computer. So we go to the checking account, we put it in as an asset, and we pay for it, either on a credit card or whatever. And now I want to make sure that I actually record that asset so that when I get ready to do the taxes at the end of the year, I can provide the accountant with a list of all of our current assets. So to do the first step, what we're going to do is we're just going to pick the date that we purchased the item. We're going to go to the location if we have multiple locations. We're going to, for the asset account, this is going to be the main account that we're going to put that computer in. So let's say we choose the fixed asset account for office equipment. Now, when we depreciate this particular item, what account do we want to depreciate it against? We're going to go against the fixed office equipment depreciation account. And then overall, what is the expense account that we're going to hit for the depreciation? And I don't even know if we have one in here because this is just a test database. I don't see one. Here it is, expense depreciation office equipment. So the next thing is, what is it? So we bought Jim's computer. So we'll just put it in as to what it is. You might also, if you have multiple offices, you might say that this is the Atlanta office. This would be, I use this more for, we're in the state of Georgia. We have computer equipment that's here in McDonough where we have to pay city taxes and stuff on it. But then we also have computer equipment up in Atlanta at the data center that I don't pay McDonough taxes on. So this just gives me a easy way to say, yes, this is in Georgia, but it's actually not in the main office location. And then over here, let's say that we paid $2,500 for that particular item, and then we're just going to hit the plus sign to record it. Now, up here at the top, you're going to see that it's showing us by default items that don't have an account associated with them, and that's because these items got created for whatever reason, and the asset account did not actually get set. So they're showing up here because I need to configure these things a little bit different. But if I go up here, I can come down to our fixed office equipment, and then you can see the entries, all the entries that are here. And by default, it's only showing things that have a current value. Once they depreciate down to 0, they no longer show on this particular screen. Now, I can tell them to show by clicking this button here at the top, but by default, you're only looking at things that actually have a current value. Now, if we come over here while we're looking at it, we can open up detail about that item, and it'll show us all of our depreciation entries that have taken place. We can also edit the entry, which will allow us to change things here, and we can delete it if we don't want it on the asset list at all. Now, once we have got the item on here, and let's say that we come down here and we're going to actually record, let's say $1,000 of depreciation because the taxes have been done, the accountant's given us our depreciation schedule back, and so we need to depreciate this particular computer. So we're going to go in here, and let's say that we pick today's date again, and we're going to depreciate this thing by $500, and we're just going to tell it to add that entry. So now you can see that this particular thing has been depreciated by $500. Now, up here, I'm going to select and reselect this. So now you can see that the current value on the particular asset has also been depreciated. So when we open up our detail, it looks like, we originally bought it for $2,500 and we have now depreciated it by $500. Now, when I told you that this particular entry here does not hit the general ledger, that is true. But when we actually put a depreciation against this particular account, this actually is on the general ledger right now. It actually went against our depreciation account and our our expense account. So the general ledger entries on any depreciation hits that we put in here do go into the system automatically. It's just the original asset itself that does not show up on that on the GL. It has been recorded when you actually purchased it, either through checking or purchasing. Now, the last thing I want to get to is if we go over here to reports and we go to accounting general, you'll see here an asset list report. We can choose the date range that we want to. Let's say we want to only look at it for last year, but in this case, I'm going to just pick here. And this will actually give us a list, and I'm just going to open it up here. So it gives us an asset list that we can give to the accountant for everything that we purchased between that period of time. So anything that currently has a value on it and that was purchased between the date range that I chose will show up on our asset list to give to the accounting department or the accountant to do the taxes with.